All right, let's get some more perspective on the markets. Nate Thooft joining us, Chief Investment Officer and Senior Portfolio Manager for Manulife Investment Management. Nate, there's a lot of moving parts right now. What is your view on the markets? What would you say is sort of top of mind for you right now?
Yeah, it's great to be here. I mean, our biggest concern right now is still the long-term theme of when will central banks begin to start to pivot to be able to cut rates. And I think it's a key driver of the prospects of both the economy, but also the direction of the markets. And we're very focused on this idea of, rates staying higher for longer, but still of the view that central banks around the globe, including the BoC as well as the Fed, will eventually have to cut rates because we are going to see slowing growth and potential for recessionary conditions in both those economies in the course of the next 12 to 15 months, which is our base case scenario.
So what's your positioning? What's your portfolio strategy in light of that view?
It's an interesting dynamic because right now we still see pretty decent fundamentals as well as sentiment and technicals in the equity market. So we are technically overweight equities still because we aren't at the precipice of the recession actually starting. And so the fundamentals and the driving forces behind sentiment and technicals still lean us to be slightly overweight equities, while at the same time we've been increasing our duration as yields have continued to be higher. But we are prepared to start cutting equities as the realities of a recession are at our doorstep in the coming, let's say, couple quarters throughout the North America region and, for that matter, the rest of the world.
And on the rate front, at what point do you think, you were alluding a little bit to it, but at what point do you think there will be enough evidence that we have a clearer message on where rates ultimately are headed from here?
I think it's slightly different for different geographies around the world. We're not in the camp that we're going to have a painful global recession. We're in the camp that we're going to have a garden variety, slow growth environment. And in some geographies, that's going to happen a bit sooner. In other geographies, it's going to be a bit delayed. And for our perspective, if we focus on North America more specifically, we think Canada is already seeing evidence of slowing growth. We've had a couple quarters of negative growth, although they haven't been back to back. So we think that BoC is likely to cut perhaps as early as the first quarter, or at least within the first half of 2024. Whereas the Fed, it might take a bit longer to have enough evidence, both from an inflation coming down as well as the realities of their higher interest rates impacting growth rates. So it's more likely in the latter half of 2024 that we start to see the Fed perhaps have to cut some rates from their terminal highs that we're basically at in our base case view.
All right.